Welcome back to another Stocktwits Q&A session. I'm Brittany Umar, joined by Scott Red Dog Redler. We're going to be answering your questions live. Scott, they're already pouring in, so what do you say we start off with the first one?
Let's go. Here we go.
What do you think of the S&P the day before the jobs number is our first question.
I think a lot of people are having a hard time figuring out how to go out into tomorrow. So it makes sense to be light. I feel like today I came in, everyone saw me tweet yesterday that I was starting to be net short as we started to get above 1370, above 137.50 in the spiders. And pre-market, when we had the news of the Bank of England, we had the news of the ECB, we had China cut, things were higher. So I was like, okay, let me lay out more spiders. And then we did get a brief pull-in the first 30 minutes, but lately those pull-ins have been viable. And right now we're in one of those confusing tapes where it feels like they want more bad news because we're rallying on hopes of stimulus versus when the ADP news came out that wasn't so bad, we sort of, sold off right there. So at this particular point, if we take a look at the chart, you will see there was many calculated points, but at this point, it's getting to the fact where it's really hard to be long and, shorts are not really working unless you're very surgical. To go over this last recent pattern, we talked about the inverted head and shoulders pattern. Right? Here is the left shoulder, here's the head, here's the right shoulder. Remember this 1306 to 1309 right there, that was your support. And then the depth of this right shoulder was about 30 handles. So if you look here at like 1330, you had the 30 handle move into the pre-Fed. That's when we said, okay, time to take a little bit off from the 1266 up to almost 1360. It made sense. Then it was a little bit of a trick, and I'm going to tell you the reason why I'm focusing on this or just talking about it, because you remember that day right in here, we tried to go lower and the markets held in and everyone's like, oh, we're holding up really well. Maybe we just beeline it all the way up to the measured move. Look at the potent downside day. So that was like that brushback pitch. So we always get a brushback pitch and they always make it hard. So if you take a look here closer, it came right back to retest that 1306 to 1309. And if you remember, we used another little gadget of ours, the Fibonacci retracement. So if you go from the low all the way to this high, remember it held the 61.8% retracement, which was like the last line of defense. Remember Spider-Man was coming out? I'm like, we're hanging on by a Spidey thread. Well, that was some pretty damn strong thread there, And then you look here, we had a nice little pivot here. EU came out with some news, and basically we ignited through it. And then let me just take this out so you don't see, much all this noise here. And then today, we opened up pre-market a little bit higher, but it held support. This was the last peak. This was what, 1363. This morning, what did we hold? 1363. So at this spot, with the jobs number tomorrow, and a lot of people caught short, it's a tough situation, but I do think you could have strong stocks and just have a hedge. Be hedged with the spiders or the diamonds if you come back to me. Basically what I would say is own strong stocks and have a hedge just in case. So this way, if we open up lower, you could cover some of your spiders and then see if those strong stocks that are acting well, you could add to them or you just let them sit.
Now, how does that compare to your strategy today? Why were you looking to short the open today?
Just because of the type of move that we had in the spiders. If you look at the chart of the spiders, you will see that basically the sell zone that I had was really 137. Here we go, the spiders, I think right into this point. If you remember, I talked about this point here, 137.56. This was a mini target here, and then the next target of the measured move was up to fill this gap. So I just thought, coming above this area, we had a nice move from this gap. It was worthy of being net short versus longs. And at this point now, the longer we stay here, and if we don't go back below this, just say 136.29, chances are we do get that measured move. And again, the way we calculate the measured move is from the neck to the head to the neckline right there, and then you do the measurement right there, and that's how you get that. But a lot of people would rather it not go with an elevator type movement. Like if you look here, the straight up. We like escalators that go sideways. So maybe we get a little bit of sideways action, let some charts rebuild, and then you get another power push. But for now, with the jobs number tomorrow, we have a few points of reference. You have this low here, which was today, 136.29. And then I think in order to keep up any of this pent-up momentum, 134.85, which is where the moving average comes in, this should hold. Any move into this gap or any move to break this strength here, to fill this, I think some short-term guys will say, okay, the rally that's based on hopes of stimulus and not on good news is hard to sustain without it. So we can, so we'll see what happens then.
Well, here's one from Market Picker saying, what do you think of the market composition now? What kind of portfolio approach do you think is the smartest?
Well, what's happened in the past few weeks is you've seen a spirited rally by some of the laggard groups. If you recall, about 3-4 weeks ago, the agriculture group bottomed, and it had a really nice move off the lows, and now it's into resistance, and it also, kind of coincided with the start of the third quarter. So I do think that, it was worth a trade, way back when. But if you look at the chart of the ags now, it's, coming up into some major resistance. So at this point, it's worthy of taking some off. And within each group, you always want to stick with the leaders as a macro investment, but you could also get a few laggard type trades for cash flow. So if you go back to MOO, you will see that, Monsanto was the one that went to new highs, and if you were an investor, congratulations, you're taking no pain here. But if you also was, you tactical and you looked at Mosaic, and we talked about this red dog reversal right here, it made a low, came back up. You could have caught yourself a really nice percentage move, almost 10 points off the bottom. So if you didn't get caught, in that big down move, you could tactically enter right here. We have a Mickey in the audience, and he knows that a red dog reversal is great tactical play with Jeff. You came back above this 48.60, pow. Then you saw some commitment to it. You had another trade through this lower pivot area. So sometimes lower pivot area laggard trades can work. So here you have a nice spirited move. So you had a laggard play work, and then you had a leader going to the highs. And today it opened lower and held in there. Same thing with CF. CF leadership stock, at the highs above the moving averages. So looking pretty good. You didn't have much pain here. So as far as composition of a portfolio, I would say no longer. I say 5 to 7 positions. We're still in a confirmed rally, but make sure you have some hedges on. So this way you could just maneuver them. So when you have down moves like you saw today in the spiders, you could cover into the weakness, see if your stocks are holding up. If your stocks are showing relative strength, you could add to them, and then when they break out, you sell some, use your tier system. So at this point, try and be in the best of the best, and just know that if you're playing a laggard group, the music could turn off very quickly. But recently, the OAHs, the AGs, even some of the banks, those moves are a little bit more spirited than even some of the bears would have liked.
Now, speaking of some of those laggard groups, Chartgirl NYC says a lot of laggard groups are having sustainable moves off the lows. So does that mean that we could be close to an end of the rally?
It does. Sometimes when you see like the trash for treasure trade, when like the little crap stocks start going and everyone's like, oh, what can I trade next because there's no room left in the majors or in the quality stocks, I do think that it does give you some warning signs. Every like market cycle, it's always, some of the stocks, like remember it was the GSEs at one point, and then it was the AIG at one point, and then it was the drillers at one point, and then it was the shippers. So anyway, I think that the move we saw in the refiners and in the ags and in some of the banks off the lows were a little bit more than a dead cat bounce. That's why it's been hard for the market to sell off. And the move that we've also seen in some of these second and third tier names, I think we're potent enough that, it's worth your attention. Like today, I'll just give one example, or not even today, it was from Tuesday. Some of the high beta names started to wake up. And Sperling had an unbelievable call with Netflix. He's like, I've been watching Netflix. Netflix has some volume. My trade is through 69.50 and 70.50. And look at Netflix, what it did for a tactical trade. So here you go, right back into the lows. If you remember earlier in the first quarter, we were all over this trade. And this was wound up being an unbelievable trader. So from here, about 76 all the way up to the $130 range. It was a nice trade, and then it started to fail. And then, right back on, I believe it was Tuesday, he started tweeting about it. Similar setup, nice and tight. Saw it start to wake up right here. The reason why he had 70.50 is because look at that, 70.48. If you were short versus area, you would cover. This was day one. And then you had some news today about 1 billion downloads or whatever it was, and you had your follow through. There were a lot of trades like this today. So tactically, a lot to like there.
All right, here's another one from Market Picker saying, aside from GLD itself, what do you think of gold, the symbol? Inverse head and shoulders pattern, or is he seeing it not clearly?
It's kind of my nemesis right now. It's been a tough trade because every time it went to this intermediate downtrend, it's failed. And I, as a trader, love to play a stock through or a sector through the downtrend because typically you get like a 3-4 day move out of it because when trends change, they're powerful. That means shorts get squeezed, you get a new trend, and you're not even like really near the high, so there's room. So there's a lot of different, this little Netflix trade, just say to go back to it real quickly. look how powerful this was, because it's come in so much, and there was a new little trend start to round over, and once this trend broke, you had power here. So if you go to the GLD, you will see there are about 3 different trends here. Okay, and first things first, you had the high where it made that reversal. You came in and literally we're like $400 off the high in gold, and GLD we're down from about 190 all the way. We were at 148.5, and look how tight this little trend is here. Okay, so everyone that started shorting it versus this intermediate trend line has made a lot of money, but so many times you go back to the well one too many times and you get squeezed. So here, if you shorted it, it worked. Here, here, here. I don't know why I wasn't shorting it each time there. I think I was buying each one of them. Anyway, finally it failed, came back, retested this December low. The December low here was 148.27. This low here was 148.60. This low 150. This one here was 148.50. So this macro support has been holding while this intermediate downtrend has been controlling it ever since that Fed day when it did this potent down move that engulfed this entire range here. So PS, take a closer look here. I did lose money today in this, and I'm still in some. It's definitely a frustrating type trade, but if you take what I did out of the trade here, you will see that this little gap held. So even after all the weakness today, this gap held, which was from the EU summit. So the longer it stays, I would say, in short term, use 154.45 as your level or your line in the sand. And if we can go a little bit closer or get a little bit tighter, at some point, if this intermediate trend changes, you get yourself a nice trade to test 161 and then 165. And there are some people out there that still think the highs get taken out and we go to $2,000, $3,000 an ounce. So if that's the case, you got to get through 1, 2, 3 first in order to get to there. But then just again, one more time on the flip side, you look at this monthly trend in gold that's been in a 10-year bull market. The reason why everyone's so enamored with it, because if we did give way here at this 148.50 area, there's no reason why you can't see a move down to at least 140 and then maybe even down to 120. So again, if you look at the blog post we had in there, I think it was last week, saying how the combination or what was the word? It was like 2 trends meet, who's going to win? The macro trend, which is holding tight, or the intermediate trend, which is short term? And right now the macro trend is still holding up.
Now, you touched on this, but Ticker Traders was asking, how do you deal with gaps on the GLD's chart?
Well, it depends if it's intraday. It depends if it's on a daily chart. It depends if it's a pro gap. There are so many different types of gaps out there, and they all mean something different. Typically, a gap helps you with direction. If you get a gap up on a particular day, and in the first hour, that gap doesn't get filled, the rule is you go in the direction of that gap for the remainder of the day, and you get a trend day or you get a gap and go. That's why they call it gap and go. But on a cash flow basis, typically the gaps get filled, so it's good for cash flow. Whereas it doesn't work as well in stocks, but in the GLD itself. So actually, you could say it like this. So you want to talk about the GLD? I'll go right here. You see this gap right here in GLD. It's just a good point of reference for traders to trade against. First you see here you had this gap to the downside. So this gap did not get filled, so it showed you that this gap had powerful, direction to the downside. So this was never filled. It led to a nice move down to the lows. So now you have a pretty powerful gap to the upside from last Friday. So the bears are trapped, and the longer that this gap stays intact, the more bullish it would be for continuation of direction into this intermediate trend. But then if you go to your 5-minute chart, so to speak, in GLD, yeah, actually it got filled early on. It happened this way. This really resistance area from the morning is like, it was also a small type of gap. So short term, if it doesn't fill this quickly, then chances are, it sounds like it's like one after another. Chances are, if this gap doesn't get filled, then they'll try and pressure it into this one. So gaps all mean different things. It's all depending on your time frame. It's depending on direction. But chances are, if a gap does not get filled, it typically goes in motion in the same direction of that gap, either intraday or weekly.
All right, well, keep the questions coming, guys. We're just going to take a quick commercial break. We'll be right back.
Hello, everybody. My name is Pete Renzulli, Chief Marketing Officer of T3Live.com. and one of the traders in the active mentor room for T3 Trading Group. What I'd like to do today is I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit in New York City, which is on Saturday, July 14th. We're going to have quite a few speakers today. There's going to be myself, Mike Lee, Evan Lazarus, Mark Sperling, Rob Smith, Rick Meadows. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people like myself. I'm going to pump you up. I'm going to guarantee you that. Other people like yourself who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. I can't stress that. I know it's a Saturday, but you know what? I want you to be there, to get excited, and to be here. Prove to yourself how bad you want it. Show up and come down and get excited with us. Saturday, July 14th. Now, very quickly for the registration. All you have to do is register at t3live.com or be an existing member of t3live.com, and you get 2 complimentary admission tickets for free. So all you have to do is go to t3live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time. Saturday, July 14th, here in New York City.
Welcome back to our Q&A forum. We're answering your questions live. Scott, we have Market Picker saying he thinks he sees a Head and Shoulders pattern in Rheingold, ticker gold. Can we take a look at that?
Inverted?
Inverse Head and Shoulders pattern.
Okay, so let's take a look. As far as miners, you know that I don't love trading them because they always have problems that you don't see. But if you look at this macro pattern here, I do see an inverted Head and Shoulders pattern. You know, I just drew the left shoulder. Here's your head. Here's your right shoulder. Plus you have a nice potent move, you know, and then it held higher. You know, you do see a neckline coming into play here. So overall, you know, this is sort of saying that, you know, this does have higher prices. Granted, it's a lower level type of laggard play. Gold's been weak. But overall, I know that some people who follow these gold miners very closely, I know that Alex Steele likes the CEO of this company. So that's half the battle with some of these miners. So overall, if this were to fulfill its measured move, okay, from just say 75, some people might even say that this was the neckline, so you're retesting it. Just say 75 to about 90, then from 90, you know, you add $15 and you get 105, which would take you right to where it broke down right around here. So all in all, I would say it is looking constructive. It's had a nice move. Right now you have a small little gap. It was a red day, so I would say see if this gap gets filled. If the gap gets filled, it'll take up some, you know, pent up momentum here, but then overall, you know, it's definitely acting a bit better. It rallied well. Let's see what Newmont did. You know, if it has the same type of pattern any of these miners. This one's not as no, it's not really much to say here, except for it did break this small downtrend, and then retested it going across, and now this is, you know, has another small little downtrend. So if Newmont started to get above 50, it would probably help the group. So overall, let's take one more look here now at the GDX even. And this, to me, yeah, it's okay. If you're in the miners and you have a miners thesis, that's fine. I personally don't like the miners. It's acting a little bit better than the gold itself. You broke this downtrend, came up. You almost have like a little bit of a double bottom here with this low of, what is this, 42.60 as support. Here's your resistance. You know, this is the last level just broke above. So you have to like pretty much put it in segments here in order to monitor it, so to speak. So I think it's okay, it's fair, but you really have to like this group to be in this group because there's always a lot of problems.
All right, let's switch gears and talk biotech. Ken coming in saying, Scott, biotech is hot. Thoughts on ARNA Pharmaceuticals, ticker ARNA. And he also says, good luck on the 1 month to go, August 11th, New York City Triathlon.
Nice. Thank you very much. So in the scheme of biotechs, you think I have some kind of bioengineering going on in the dog's body? No. Anyway, just good nutrition. I feel like I missed a lot of this biotech move. I see a lot of stocks breaking out. I see some of the holders that look really good. You know, on off the charts, we've talked a lot about like AMZN and BIIB and that PSYC. There's a lot of stocks that have done very well. So hopefully you traded them in, from off the charts. But if you're watching me on the virtual trade floor, I really haven't been in a lot of them because I just can't be in everything. Sometimes I'm just the offensive coordinator and I'm not running all the routes. So it's just real quickly as far as like the BBHs, if you just look at this holders group for the overall sector, unbelievable. Above the moving averages, near the highs, trending ever since this last one, not really giving anyone anything to worry about. Had a nice little breakout too when the market was strong. So the BBHs are strong. You look at AMZN real quickly, unbelievable move. I remember this is, I think, when we had it in off the charts right here was when it, had a long sideways channel, broke above the channel, retested the channel, and then look at this, it loves to trade in channels. Then it went again, broke out a retest, here you go. So your question is on ARNA, ARNA. Let's take a look here. Overall, it's acting very well. Someone asked me about gaps and what happens if gaps don't get filled, what it means. Well, look what happened here on this ARNA. You had a really nice gap, it was a pro gap. It gapped up and it didn't gap and go, but it gapped up and consolidated and never filled this gap. So everyone who was trying to short it, everyone who was trying to get it for cheaper prices, they didn't get it there. And then it continued because once it went above that open of 701, here was another little buy price. And then what happened is you had a nice move. And then as it goes higher, these things start to get a little volatile. And right now, today you had a nice wide range bar day. It broke above this little mini inside range here. If I were to put in, I should have volume on here. I don't know why there's no volume on here. So I'll go to my basic studies, go volume. Let's see what kind of volume there was today. Decent volume compared to the last few days. So I would say take this out of the way. It is a point of reference. You have 1350. Really, if it starts to get back above this 12, you would probably see more short covering. And then you got to look to really, I think, your weekly chart to see where it can go, to see where your next area of resistance is. And it's, it's coming into it. So I would say into this 15 range, you got to be a bit careful. Look at the size of this move. But on the daily chart, it's still methodical. Just, take your trades as it come and maybe at night have some kind of hedge on because, again, a lot of news happens in these things. But as of now, technically, it looks pretty good.
Let's take a look at Russell, R-U-T. DBQ writes in, what do you think about Russell? Is 830 a good spot to short, or do you think it'll challenge 847?
The Russell, bulls always want to see the Russell do well because that has all those growth stocks in it. It's where the excitement is. And typically, when you get growth and you get excitement, it helps to sustain a bullish type move. So I looked at the Russell, I think today or like last night also, and I'm like, maybe I should get a cute little short in the Russell also, and I didn't do anything with it. Let's see what it did today. If it, if it rested, and right now you see a small little doji type rest candle in the Russell. Okay, so if you look at the IWM, which you could trade, here is your nice potent move. Okay, it gapped up just like the rest of the market on EU day. It has not even close to testing this gap, right? So it's showing strength, and then you now finally have your first red day. So I would say here's a point of reference right there, which is 8103. Okay, and then it could really even pull back all the way to this 7950 and still be in the game for higher prices. You do have a peak right here to deal with, which is 8253. So that's a point of reference, and then obviously you have the highs here. I would think many people probably tried to short it through the floor that broke here. Remember this floor that held intact? It broke. Typically, if it was going to be that weak, it wouldn't have been able to bust through it and penetrate, but we penetrated through. You now have a micro range right here to trade against. With today's low being one level, here's another, and then this is something that should hold if it's going to be stronger, and then obviously the gap. So we'll see. I think at this point it's been a nice move. Stocks in this group had a nice move, so I would just, not be anything more than a tier 1 or tier 2. And here is actually the Russell itself. So let's see, real quickly here, very similar, where you had a big move. You see a small little doji here. I would use today's low as your point of reference, but you can pull back to here, which would be about 797, and that would be healthy for this, little energy pack type group of young little stocks. But if it stays up here and doesn't let the shorts out, next time it gets through this today's recent high, you then have this point of reference, which is 830, like you were just asking me about. And then you have the highs here, which is right around 847. So I would just have all your levels in front of you. Do not chase this, but it's holding in there and it looks somewhat healthy.
All right, we're getting some questions about Fusion IO, ticker FIO. One question was referred to the kind of setup that you saw in Fusion IO today, and we actually just got one saying that I know Sperling was talking about Fusion IO and First Solar. What are your opinions on them? This guy is long FIO and looking to get long First Solar.
Okay, well, FIO was like a name that we used to trade with. Like all these old school momentum names that have gotten beaten down, they seem to be waking up right now towards the end of what has been a pretty big move. So that sometimes gives you a little warning signals. But if you take the trades and run, doesn't matter. Your cash is in the bank and you booked it tactically. So tactically, FIO obviously not a leader whatsoever, but you know, it had a nice tight setup. And when you have a stock that's heavily shorted, that a lot of momentum traders get involved, you use your levels. So, with FIO, you could say, here you go. First things first, it woke up right here. You had the small downtrend. We talk about downtrend that are bottom feeders that could change and be decent for a trade. So this was your first time it did that. It was a buy above this 1924. And then what happened? It held the top 25% of this move. And I talk about that all the time because you want to see commitment to an igniting bar. So here's your igniting bar. And then it was a sloppy, sloppy mess. But what did it do? It held at least the top half, if not the top third. So that shows you that this directional igniting bar still controlled it moving forward. You did have a small little outside day, it just wasn't ready, but it didn't lead to anything. So then today, it pulled in a little bit with the market weakness, and then it got stronger, and then you could have bought it above 2131. You could have added above here, which was that other little point of reference right around 22, and it did go as high as 2243. So it was a nice little trade. But again, laggard type trades, you have to just be a bit careful because sometimes they do last a little bit longer. But again, it's a laggard for a reason. In this rally, though, the laggard trades have been spirited. So there is a chance you see at least this here. So this would be 2421. So you have room to here. And then the 200-day also is curling in around 2475. So if this wants to continue, it can. So I just want to show you a little bit of my tier system, just so you guys understand it, because I try and explain it a few times. Almost like right here, when this was waking up, this would be your incubator tier 1. And then when it traded above the high here of, just say, what was this high here? This would be 1924. Now you're in tier 2. It closed that day strong, you get back to tier 1. And then you could have even sold it maybe on this day when it broke out and failed. And then when it started acting well, again, you get into your tier 1. And then so this way you watch the action. You saw the action was strong. Today you get into tier 2 when it broke above 2130. And then it extended. You sell into it, get back to tier 1. So now you hold tier 1. Maybe it goes sideways a little bit. And then next time it clears this little high here of 2243, you get back to tier 2. And then you sell some. And then this way you could hold some and trade some and trail some. A lot of people always make fun. They're like, all right, I know, Red Dog, sell some and trail some, and that's rightly so because you take some of the cash flow, so this way you feel comfortable holding.
All right. Well, how about we get a little specific? Big Ponzi wants to know your thoughts on Amazon.
Amazon's acting well. I know today some guys lost money trying to play a breakout or just wasn't ready. I thought that Amazon would be somewhat weak just for the mere fact that Apple came out. There was some talk that they can have a small little iPad with a smaller screen that I think can be competition to Amazon, so it was down first, but then it went positive and it looked good. Amazon macro-wise still looks really good. The chart is definitely in check. This was the earnings move, and we talked about gaps, so I want to continue with that gaps. Obviously, right here, this was when on a micro level, some guys started to get short this, but overall, when it came in, it never filled this entire gap. So this high here was, we'll just say 196. The low of this day was 206. So you still had a 9-point gap that maintained the bullish momentum. So this is your day 1 long. Here is you could have added again, and it's been slowly methodical moving back to these highs. I don't think it's going to break above the highs here until it has earnings. People want to see that. You want to see 2 quarters in a row. As a macro trade, it's above all the moving averages. It's not even near the 200. It's above the 8-day. I do think you take trades along the way, like I always say. And today, I don't think it's game over because it did a little push-through failure here, but I just don't think it was ready to break above this 229.34 and retest 234 just because there's still a little unknown about what type of gadget Apple's going to come out and what type of effect it's going to have on Amazon. But ultimately, it's fine. I guess I'll draw this. Here is this, somewhat of the uptrend that it's been following. I would say if it starts breaking below this area, maybe have a high level stop if you're worried about it. Last time it tried to break, it couldn't. So after a move like this with a bit of an outside day, it could equal some more weakness. So just watch this level and then even watch this 222.
Now, is it time to buy casino stocks yet? We have one from Ticker Traders asking, what do you think about Las Vegas Sands and WYNN?
All right, well, these stocks have been battered, bruised, and these are broken down former leaders. I've tried them a few times in the last month and they haven't worked. And with the success we've had with some of these other former broken down leaders, I know today Mark was like, oh, what do you think of LVS? I'm like, oh, I'm so sick of that stock. Every time I try and play it for a bounce, it doesn't work. And if you look at LVS finally today, it had a semi-reversal. I wouldn't say it's extreme. I wouldn't say it means it's going to, all of a sudden be a blockbuster type trade. But if you sold LVS when it broke this support here, okay, or if, you sold it when, I think that was the major area. I think that was the sell-in right here. If you sold it here or even sold it on this outside day, remember this outside day, you have the luxury of trying it a few times. And I know I tried it a few times in here, it didn't work. And then today, you had a bit of a reversal. It showed some relative strength. So there is some room. And I've seen some bounces in other laggard type stocks like your Baidu, like we just showed you with the Fire, with the Netflix. So people are looking for some things to do. So I am in tier 1 here. If it starts to get above this 44.10, I will probably add to tier 2, take some up into 45, and then see what happens. And as far as WYNN, it also has a lot of noise here. Still can't get out of its own way. You did have a bit of a reversal. When it does a red dog reversal, I try and go with it. It traded below this mini support, closed strong. So, got some people out, got some people short. So we'll see what the next move is here. A 105 would be the next resistance, so it has some room if it wants to. If you remember, Goldman Sachs upgraded it here. Where the hell are they now? But anyway, it's hanging in there. They're still, these are, I would say, B- setups. But lately, if you want to love them and leave them, B- is typically you love and leave, and A+ is you marry, right?
I like that. All right, well, we're going to, on that note, take a quick commercial break, and we'll be right back.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders to understand how to develop an edge in the markets so you can put your money to work with confidence. The T3 Live approach includes a mix of training, trading, and technology to help you learn to recognize, adapt, and ultimately take advantage of different market conditions. So what actually separates T3 Live from other educational firms? For one, transparency. We show all of our positions live, so there's no smoke and mirrors. Basically, we put our money where our mouth is. We have to because we're regulated by the SEC and the Chicago Board of Exchange. Number two, we're real traders. You'll be learning from real professional traders that make a living trading their own proprietary trading accounts, not just instructors that don't trade. Your goal should be to associate and learn from big traders who can teach you how to take your trading to the next level. And three, credibility. Millions of people turn to places like CNBC, Wall Street Journal, Fox Business News, and these outlets actually look to T3 Live for information. No other educational firms are asked to be a consistent contributor. We at T3 Live would like to get you started with a step-by-step method that has been proven over time. The same blueprint for success that I've gone through. It's not a weekend seminar, it's an approach, a mindset, a process to show you how to take control of your financial future. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our Foundation 30-day online home study course. The reason I'm willing to give you such a valuable course for free is I'm sure that once you complete the program, you'll want to continue your education with our team. All you have to do is fill in your name, email address, and I'll see you on the other side.
We're back and we're answering your questions live. Got another one here from Market Picker who says he's trying not to hog the stream. Don't worry about that. Send as many questions as you have. We'll try to answer them all. And Scott, he says, when you're trading in general, how do you determine if you should sell into resistance or buy for momentum?
Well, that's exactly what people have been trying to figure out now. When you have these laggard groups, sometimes you get a day bounce, a 2-day bounce, and then everyone just reshorts them. But then sometimes you get a spirited move that goes further. And then shorts that come in too early, all of a sudden start to get squeezed. And guys who sell a little early are like, oh my goodness, I just gave away great prices. You know, we saw that in a lot of the ags. We saw that in a lot of the refiners. So, you know, it's very hard to figure out what's going to just stall or what's not. But you just have to know different levels and then watch the action as it goes. So if you look at really quickly at the MOO, which is MOO, which is an ETF for the ags, you know, a lot of people would have thought that, you know, it would have stopped basically right here. Okay, this was a pretty big resistance. So, you know, you came back, came through it, and then you know, you had this wide range bar, but it wound up holding higher. So anyone that was just shorting from this, you know, they got a little squeezed. You know, you could just make it even a little bit bigger here. We talk retracement. So, you know, this wide range bar, people thought it was game over for the ags, right? You just had to move from below 45, broke above resistance, pow, wide range move to the downside. But what you want to do is you want to use some retracement rules. So if you look here, once this 50% mark was taken out of this wide range bar, it negated the strength of it. So you can't just be short saying, oh my goodness, this should control the entire move, because once this closed here, it negated the power, and then you had a really nice move into other resistance. Now, if you look at resistance now, you know, it's right in front of where it broke down from in May. So it's a good spot to pause. So I would say if the ags hold in there and go sideways and keep this opening gap here and keep it unfilled, you're going to still see some momentum here. And then next time it tries to get through old support that turns into resistance, you could see another move, maybe to retest where it broke down from right here. So you could always measure along the way, and measuring the strength using bar by bar analysis definitely helps, because right here, this was a controlling bar, but it got taken away right on this day. So you had to become a bit more flexible. And if you weren't, you've been squeezed this entire way. And if you look at just say even Mosaic, so to speak, same thing. You know, here you had the red dog reversal, 3-day move. You know, and then if you said, okay, I'm going to measure the commitment, you saw commitment, it never pulled in. If you want to quickly go to your Fibonacci retracements from just say even this low to where it peaked out right there, it never pulled in more than it actually pulled into the 50% mark. So it showed you that dip buyers were coming in here, you were getting commitment, and then pow, it gave you another move. Then it retested and went. So there are ways to measure or not whether there's commitment to a move or it's just a laggard bounce. So you just have to take it as it comes.
Well, earlier we talked Netflix and what Sperling saw in the chart when he bought it around 70. Now we're getting a question from Stock Crazy saying, Scott, do you think Netflix fills the gap from late April?
Let me see what gap he's talking about. So you go to Netflix, late April, here is a big gap. There you go. So I would say the momentum that we just saw in the last 2 days is hard to ignore. Okay, these 2 days of strength was very powerful. If you go here, you go back to your basic studies and you put the volume in, you will see that this is enormous volume. So that means somebody covered, somebody got long, so let's see if they protect this move. So what I want to do is kind of what I just said before with the measuring retracements. As long as we hold, I would say, the top third or half of this bar today, I would say it's in the cards for it to then take out today's high and then test this gap here. The gap here starts at 90. Typically, gaps like to get filled, and if this gap gets negated, this downside pressure will not continue. And we talked before about what a gaps mean. Remember that? Well, look at this downside gap. It never even attempted to fill it, and that led a move from 86 all the way down to almost 60. So that's why we talk about the importance of gaps. But now you have a long enough consolidation or base building. Again, here's this downtrend that broke to the upside. So now I would say, using your retracement rules, people probably would measure it from different spots. I would say if you're measuring it from the last 2 days, you want to see at least like 77.50 hold. If 77.50 holds moving forward, chances are there's enough shorts trapped. That means dip buyers are coming in, and that means potentially you go test this gap and then fill it at some particular point. So at this point, nice 2-day trade. I am out of it. It's now on every momentum trader's radar now. So if it could hold, just say the 77.50, we're at 81.72. I do think you get continuation there.
All right, we're bouncing around here. Let's talk oil. Ticker traders asking, what's your take on the OIH?
my take on the OAH is that it didn't bounce as spirited as the AGs, but it had a nice bounce. And the OAHs were actually bouncing right before the EU summit. I remember seeing them on that Thursday or even the Wednesday before the Friday, and I'm like, the OAHs just, they're not going down anymore. You know, oil was below 80, looked like it was going to break 77.5, and you know, I'm like, I see some kind of divergence here, and I actually got long OAHs 2 days in a row. I just didn't take it into Friday, which was just my mistake. So if you look here at the OAHs, you will see that, let's go to the chart, you had a red dog reversal, not really a potent one, but you had one here where it traded below this low of 32.80, made a pivot low of 32.54, so you could have bought it with a 30-cent stop. You had a nice 2-day move off the lows, okay? And then, you know, you had the gap up with the EU summit news. And then if you look at this resistance or this downtrend, it's trying to hold it for now. So I do think the longer we hold above this, say this 36, or even, I'll even give it a little bit more room here. As long as we hold above this gap and show that it doesn't get filled, that the buy pressure is still there, chances are if the market stays strong, we could continue higher. But at this point, it's still probably one of the worst groups. If you look where it came from, it hasn't really bounced whatsoever. But it's in the game as a laggard play to continue if the market lets it.
All right, well, we're just about ready to wrap up for today. Of course, we do have the jobs number tomorrow. So where will your focus be heading into trading tomorrow?
Well, I still have a few longs on, and I have spiders as a hedge. So what I'd like to do is a few things. If we get a number that's not market friendly, okay, which at this point I'm not exactly sure. I think if we get a horrendous number, you know, even though people can say, oh, we have to have stimulus from the Fed, we're going to see weakness. If we just get a soft number, I do think that, you know, going to the spiders, it'll be somewhat muted. So I think you need to write down a few different levels here in the spiders. You know, this being level 1 support right here, 136.29, and this be level 2 support, 134.85. So I would say if we get a number that's soft and you see a gap down, I would probably be covering my spiders into this gap area. I wouldn't be pressing it here. Same way I covered into 136.30 today and I didn't press it, so I was able to short some, you know, some strength. So with that said, in this down move, I'll cover and then I'll see if stocks like Apple, stocks that have been strong or show some strength, and I'll see if I can add to those. If we get a number that's market friendly, whether it's maybe 130, 140,000 and we gap up, I would probably then add to my spider short into this area. The zone that I think will be hard to get through is 138.66 to this 139.5. So I would probably add to my spider short and I would sell the longs that I have because I do have about 4 or 5 longs. So, you know, here I would cover some spiders, see if I could buy some of my longs. Here I would add to some of my spider shorts and sell some of my longs, and that's how you use trade management. So at this point, I think if you do have multi-positions, you have to have some kind of hedge. And if the market gaps up tomorrow, you sell some of that, you sell some of the stock that you have and add to some of your spider short, especially if you just started around 137.5. There are guys that are rolling up their spider short from last week and they're in pain, and there's no way that they'll probably capitulate out tomorrow into 138.5, 139.5 because they've been rolling it up and they just can't take it anymore. If you just put on your short like yesterday, right around 350, I'm just net short for the first time in a while at 137.5. To me, I should be able to take a little bit of pain. Even if we do go higher later this year, I thought that 137.5 to 139.5, the first time we get there, is a better sell than a buy. But that's just using tactics. So tomorrow will be interesting. I do think that we've had a lot of stock-specific type trades. Last time, into the same year, we had the same type of setup where they had the shorts on the run, and then it was a horrendous jobs number. They gapped it down, and then that was actually the high of the market. So I'm not saying that's the case right now, but we'll definitely at this point I think be light. Don't let tomorrow dictate your summer, because there's a lot of trading left and there's no reason to have that kind of risk on.
All right, thanks so much, Scott, and thanks to all of you for sending in such great questions. We'll meet you right here next Thursday for another Q&A forum. Have a great night.